What's up, players, traders, haters, apes, retail investors, the whole gang, right? Latino gang in the house. What's happening, right? It's your boy D. And I want to welcome you back to D's Daily DD, right? Where we talk about stocks, we talk about cryptos, the market, right? Business, all kinds of things, right? So shout out to all the new subscribers. That last video, that I did last Friday, I guess people really found that information useful, right? I saw a good amount of views, a good amount of likes. Thank y'all. I appreciate you watching, taking the time, right, to check out my video. And even though I'm not a financial advisor, it's not financial advice, right? I go and I dig and I look for the information and I put it together and then I give you my opinions and my thoughts on it, right? So thank you to anybody who has been with me throughout this journey, right? Because I've been doing it for almost like 6 months, I would say, and it's been a crazy journey, right? It's like opening your own business, basically, right? Like you're trying to build your business, build your subscribers, right? Your followers, whatever, and all that. So it's still a lot of work, right? Like even though it looks like I put out these 10, 15, 20-minute videos or whatever, it does take a lot of time to do these videos, and I consider it like a job, right? Because I got people here that come to look for the information, and I want to give you the best possible exact information, right? So this past weekend, I don't record usually on the weekend because I like to take a step back and kind of see what's going on, right, in the community and news and stuff. And usually not a lot of news comes out on the weekends anyways. It's mostly just people, just talking. But this past weekend, Trades, he released, I think it was yesterday, a video that not a lot of people are happy with, right? And he took, the step to do it. He took the challenge. He did it, even though he said that, he was trying to stay away from this topic about how high the price can go. But look, guys, it doesn't matter what any YouTuber says, right? Like nobody knows the top, and I can explain to you why he gave that range, right? I'm gonna go into the information right now, right? I'm gonna talk a little bit about AMC today, GME, and Lucid. Okay, those are the ones I want to talk about. But with trades, like yeah, he pissed a lot of people off. But look, guys, last year when he was doing the technical analysis and looking at the chart and putting his first videos out, right, like throughout that time frame of like January to June, right, when we had the major runs, he did pretty much call it, right, guys? Like I remember watching him and he kept saying like, all right, if we do this, it's gonna go, right? If this happens, it's gonna go. And then when he said like the fourth test and it actually hit and it went, right? And that was because he was doing a lot of TA. So whoever says that, TA doesn't matter and blah blah blah, like it's not always perfect, guys, but it does, work most of the time, right? It does work often. So that's why I like TA, and that's why I follow Trey, because he's very technical, right? And I am too. I like data, I like numbers. That's what I base most of my decisions in the market off of, even though now we've learned that it's manipulated, that it's only what they report, right? We've learned a lot since, the whole time of like from January till now. All right, guys, so I'm gonna give you some hope here, some hopefully some motivation, because I know a lot of people get down and stuff, but it hasn't happened. But guys, it's here, it's close, right? Like we're this close. Like the fact that the amount of shares that are on loan right now is another record high. Like we got to go look at this information, all right, guys? So thank y'all. Let's jump into it, right? Let's not use any more time here, but let's get into the video. All right, welcome back. So if you haven't hit that subscribe button, please do. Hit that like button, really helps out the channel. And this is just an example of a short squeeze, right? So if you don't know, short squeezes are nothing new, guys. Like it's not like AMC is like gonna be the first stock to ever squeeze, right? Like there has been multiple short squeezes in the past, and this is one of them, right? This is called Sen, where you see this price, and yeah, it was in the thousands already, but look at how much it jumps, right? So you have a little run up and then a dip, and this was in June 8th, right? Okay, now pay attention to June 8th, right? Remember that date, okay? And then boom, by June 29th, what happened? This lasted 2 to 3 weeks. And you see the price go from 2,100 to 9,500. All right. So that's a big move, right? That's a huge squeeze right there. And then what happens? You have a drop, a dead cat bounce, and then finally it comes right in. Where is this at now? $2.09. All right, guys. So always make your own decisions, guys. Things are gonna happen. I think the squeeze is gonna happen here soon, and you have to decide when you want to get out, right? Because look at all, for this thing took a year and a half, basically same time frame. Look, 2017 to June, so about a year at least, right? And then you saw the squeeze, right, on this stock, this particular stock, right? I don't own any of this. I'm just showing you an example, right? Because Trey, right, he made this video, and he got 107,000 views. He's got a lot of attention, right? And it's probably good and bad, right? Because there's a lot of haters that are like, oh, see, like I'm telling you now, they're gonna twist his words or whatever, right? But he went and he did it, right? But this is the video if you want to go look at it. I watched it and I understood where he was coming from, and you know, it sucks that he's putting a cap on it when he was the one that was one of the first ones, right, to say like we're gonna squeeze these guys for any amount of money that we want, blah, you know, he was pushing all that shit. But oh well. He put that video out or whatever, right? So let's just start off the top. Okay, so I know there's a lot going on here. Only pay attention right now. I'm gonna delete these right now, but to the Fibonacci extensions, right? I got two of them. So there's orange and there's blue, right? These tools are very useful for traders, for technical traders, right? They tend to use these because it gives you a big range. And you see this one right here, when you have the run, it pretty much told you where it was going to go, right? It didn't go above 83, 84, right? And that was the top of the Fibonacci extension of the move, right? Before you start to see it come back down, okay? And then the next move, right? Just taking the same concept. That's all that Trey was doing, right? I've seen another video that he put out that he explained why he gives his $250 to $300 price range, right? It's because he's taking the move and he's measuring it, and that means that once we get going, right, he thinks the top is going to be around here, 286, because that's as high as the Fibonacci goes. But there has been so much that has happened, guys, since the last move, right? Like they have doubled down. We can prove that to you, right? If you're skeptical, if you're nervous, the next move is coming, guys, right? And it's soon. Like it doesn't have to happen, but it would make sense. This would be the best time, a good time for this to happen. All right. And that's all Trades is doing. He's just using, you know, the tools to kind of give him a price range. All right. So let me go ahead and delete this Fibonacci, the Fibonacci, so it doesn't look all crazy. And I can show you the other parts I'm talking about here. So I'm going to delete these. Okay. So delete. All right. Now look at how incredibly weird this is, right? So I always like to go back to this time, right? These moves where I think we're at in the schematic, in the trading pattern, right? So when you come back, this is January. And like I said, you have the 1, 2 until it finally cracks that and it's going to push. Okay. And then look at how interesting where we're at right now. We're literally on this line, right? It bounced right there and it's just barely holding that line. Okay. Which goes back to this. It's holding the same line right here, right? What happened? You had a jump, it got rejected, came back down, and you literally had 1, 2, 3. Okay, but in my opinion, the pattern is stretched out, right, in time, like because it's bigger. So I can't tell you if it's gonna happen tomorrow or the next day or the next week, right? But sometime soon, I expect to start to make a move up, and that is because of the pattern, right? I'm just saying, like, if it were to follow the same explosion, the same pattern where you had this little downtrend, right? You go here and you have this downtrend, and then what happens? It just explodes, right? Because they have to cover, okay? And they start covering. Now, that's what I'm looking at, right? That's what I'm paying attention to. That's what I want to see the next week or two. And I do believe it's going to happen. Now, let me explain to you why, right? Okay, and then before we explain to you why real quick, this is what Trades was kind of doing, right? So when you measure this move right to the top here, that's about a 1,900, 2,000% move right there, right? When you measure the bottom to the top, right? So now you do the same thing where you go over here and you say, I'm going to measure, and you're going to extend the bottom and you're going to measure out a 2,000% move, right? Right here, 1,000, right there. Where does it show you it's going? 237, right? So it's just saying if you were to pull the same move right here, that's about where you could expect the price to go. That's just based off the tools, right? So that's what Trades is trying to get at, all right? But let me tell you this. We are getting close to the quadruple witching day. Again, this only happens 4 times out of the year, okay? So if you don't know what it is, quadruple witching is a quarterly event wherein 4 sets of derivatives, stock options, stock index options, and single stock futures and stock index futures expire simultaneously on the same day. The phenomenon increases trading volume, resulting in a greater stock market volatility. There's super low volume on AMC right now on GME, right? And where does the volume come from? It's going to come from this, okay, in my opinion. What happens here? It's explained, right? So the contracts involved, there's options, stock index options, these, right? single stock futures, stock index futures, right? Most retail traders, I don't think they're trading these. They're mostly just trading stock options, right? So quadruple witching is the simultaneous expiration of 4 financial contracts on the same date. Okay, the same date. It occurs quarterly throughout the calendar year on the third Friday of March, the third Friday of June, the third Friday of September, and the third Friday of December. Quadruple witching day witnesses intensive market volatility due to the offsetting of options and future contracts. Any major local or global financial event or around the quadruple witching day is immensely enhanced or nullify its impact. Okay. With everything going on in the background, guys, that's why I'm saying, like, this is nuts. This is like the perfect timing, right? The coinciding expiration of several derivatives results in excessive trading volumes on this day, with traders striving to roll over to close out their positions. These activities may cause relevant price alterations in underlying assets, resulting in great disorder within the market. It usually, but not invariably, triggers market volatility. This event is analogous to supernatural occurrences associated with the witching hour, and thus derives the name from it. All right. So there's a lot of information there. Now let me point out the dates, right? So the dates, it's the third Friday, right? So it's going to be June 17th, okay? June 17th for 2022 right here, right? Here we go. And I've already talked about this in the past on my channel. The last time, right, was around March. And you know what's interesting? March 18th, right? So I'm expecting the volatility like a week before or a week after, okay? Because March 18th, right? We're going to go back to the chart. March 18th was right here, 16, 17, 18, okay? What happened the next few days after that? They had to roll over those contracts, right? They had to cover some of them because they exploded on them, right? That's why you saw the push. Okay, we're coming up to that date, June 17th, all right? That's what I'm looking at, because this can cause a huge impact, right? And it's interesting, again, last year when we had this run up in June, right? The executive order, all that stuff. June, I think it was like June 16th last year. And all right, yeah, it was around over here. I can't find it. All right, but with the executive order, right, and them knowing, like I said, it usually happens like a week or two either before or after, where they're trying to figure out, right, in my opinion. But that's what I'm looking at. Okay, June 17th, it's quadruple witching day. So that's another thing I'm paying attention to. But it's just putting more pressure on these shorts, because it has to do with swaps too, guys. Like, remember, we've talked about AMC and GMB have a lot of deals going on in the background, right, that we can't see, and a lot of, like, they have said they use swaps in a lot of these, positions, short positions and things like that, to keep it down, right? So just to put into perspective what has been happening with the fee, right? It's getting way expensive to short. This is for AMC. Yeah, this is for AMC. But just to give you a visual, right? Like, the fee hasn't gone up like this in a long time. I mean, I saw it go up in May, but it's not showing you of 2021, right? It's not showing you that it went up to 80, 90%. But the spike here is intense. Look at this. Whew. Out of nowhere, right? Finally, boom, because the government is raising interest rates, because money is becoming more expensive. So this is saying the fee is at 9.1%, which again doesn't really make sense, because you have oh, this one does make sense where the fee actually goes up. But on Stanko Tracker, sometimes it'll show the fee going down, even though there's less shares available. Like, if there's less shares available, shouldn't the fee be going up, right? But this is right here. This is another record, 181.87 million shares on loan, guys, as of today, right? 35% is being shorted, from the float. 35% of the float supposedly is ready for popcorn, right? So just wanted to give you the Ortex data. 35% right here, 181 million shares on loan, guys. That's a lot of shares to buy back. 23% of the short interest, right, for AMC, and the fees, again, that's what we want to see. 19.2115 is the average, okay? So that's hell of expensive to short compared to 1%, 2%, right, that they were paying daily to short this, okay? Now, another just quick thing, I'm just going to show you on Fintel here. Nuts, they're not reporting any buys or sells since the 31st on AMC, which is kind of weird. We're gonna go over to the another, another source just to show you that the fee, this is the fee, the blue, right? So the blue is it explodes, right? When it was forever, it was just here down low, 2%, 1%. Remember that? And then that's what I like, that the fee is up, right? That's a big sign. Okay, right now 250,000 shares available, only 3,000, but it's only Monday, right? So don't, stay cool, calm, and collected. Here we go, 8.6%, right? When there was more shares, that's what I'm saying. That like sometimes there's more shares, but the fee drops, and then 8.6, is the current most up to date one. All right, so here's GME, guys. This is what I've been tracking, right? It did pretty well. It broke above here, and it wanted to make its way up, and this was in pre-market, right? That's crazy. And then what? They just started shorting it down. This is a 2-minute chart. So let's see if we can zoom out. It's still pretty much in this flag, guys, like ever since then. And it's the difference here is like it's really trying to break above, right? It keeps trying to push the EMAs now and everything, right? So what I'm looking forward to right now, guys, is I think Ryan Cohen is going to drop the announcement like randomly, right? Like they haven't announced when the share dividend is going to go. So they're doing some things in the background. And I think he's going to surprise the shorts, right? Of like when this is going to happen, okay? Again, and also for GME, there has been none reported buys or sells, nothing reported since the 31st, which is weird because like, look, if you go to Lucid, there has been things reported, right? On the second, right? So we'll go back right now. But the fee again, this is the fee for GME, skyrocketing. Like it even has a gap. That's nuts. But boom, all the way to 100 and some percent, right? And 10,000 shares is what it says most available. But what I'm trying to show you is just the explosion of the cost that is, that it's costing these shorts when they're, obviously running out of liquidity. And Ortex reporting GME average borrow ended standard trading at 177.35%. The previous was 155.2. Okay, the SPY, it's trying to fight its way back up. This is just the daily, right? It's testing this CMA because they already tested it once. It didn't quite get it there, but tomorrow we can start to see, so push higher. That's the way it's trying to go right now. But if it gets rejected here or here, guys, it's gonna pretty much come back down, in my opinion, right? That's what I could see. That's usually what happens after rejections, right? You start to see, and it's probably gonna follow this downtrend here, right? So that's why I have that line there. So not too much going on in the SPY. It dropped a little bit. You can zoom in here. I'll show you the 2-minute. Wow. So yeah, you have the drop ever since 416, just going, and it's in the middle, right? It's holding this line right here right now. Oh yeah, super. Before I forget, super sketchy, right? Here we go. Do you see these bars here? This is not a coincidence in my opinion, guys. Like it already happened 3 times, right? So this is on AMC though, but right after the market closes, right, you see a huge spike. 3 times here too, right? At the same time. That's sketchy. Like that doesn't just happen just because, right? So there was that. I just showed you the fee, SPY, all right? Let's just touch on Lucid real quick, right? It hasn't been able to cross the 20 mark, like not with a strong push, right? It just keeps tapping it and getting rejected, right? So that's what I'm keeping an eye on for Lucid. These are the supply and demand zones, right? So if it can crack 20, then I expect it to go all the way up to around 24, 25, because this is usually where the supply and the demand zones are, right? It kind of has its channels, like where it likes to sit at. And also, yeah, if it would to cross the CMA, it would help it go over, right, and give some support in order to come to test the 200-day, all right? So yeah, I have the 200, the 50, and the 10, and that's what I'm paying attention to because it already bounced off of this twice, right? 1, 2, and this support goes way back, right? Way back. You can see multiple times. Even after it came back down, it bounced, right? Made its way up, came down, it bounced, all right? So that's what I'm looking at, guys. Like I said, because if it doesn't crack 20, it's gonna come back down to 17, all right? Just that's how usually the patterns go. And like I said, it's reporting the new stuff here for Lucid. So that's what I think is weird, because I'm sure there has been buys and sells in AMC, right? It's a highly traded stock. And then this company, look how crazy, Verition. They have 25,000 shares, but then they also have 44,000 puts, all right? So they're playing both sides on Lucid there. And yeah, guys, that's, your Monday update. hopefully you guys don't get too pissed off at Trey, but I don't think he sold. A lot of people are thinking that he sold. I really don't. He was down a lot the last time he showed his position, so I don't see why he would take that paper loss. And I think he believes in the squeeze, guys. Like maybe he doesn't believe that it's gonna go as high as you or me or who the next person, whoever, but he still believes that the move is coming from what I get from it. All right, so there you go, guys. Hope you guys have a great rest of your day. Thank you as always. We're gonna have to pay attention, right? But I am saying, like I told my friends, guys, like I think a big move is coming by July 15th, guys, right? There's a lot of going on the options chain. Now that I realize that, the quadruple witching day is coming close, guys, I think we're there. I think the data, and that's what I pay attention to, is the data, the sentiment. People are not leaving. People are pissed. But they're also patient, right? The true OGs, the paper hands, I think already left. So the OGs are here and we're not going anywhere. All right, guys. So catch you later. Peace.